it's tax season. I always looked at tax season as April, but I'm learning that tax season probably starts in November and goes to year end and then starts again in filing. So there's a difference between planning and filing. How does that really work from an investment perspective? What do you think I could be looking for from the FAs in the last couple months of the year that would help me maybe to plan as they may be planning for tax season or the end of the year?
Typically from a tax planning perspective, the one thing that really hurts individuals and tax preparers is basically a lot of unknowns or unusual events occurring. Usually with tax planning, the theory is that things were going to continue along in similar lines as in prior years. So amounts of interest and dividends and capital gains typically would stay roughly the same, assuming the market stayed roughly the same. The danger becomes when you have, I think you mentioned this too, a lot of unusual events in the year. Obviously with this year, the coronavirus, and with the election, there's been some big swings in stock movements, and even in the past week, there's been some big swings in the stock with the vaccine information and those types of things. So from a individual and from a preparer perspective, I think there could be some events this year that may be atypical from what an individual would normally see in their investment returns. So from a planning perspective, we would like to see basically what it's going to compare to prior years, and if there is an opportunity to do any kind of last minute transactions to reduce their tax liabilities.
I got an article the other day forwarded to me about tax loss harvesting, and can you give me maybe the 30,000 feet definition of what tax loss harvesting is?
Tax loss harvesting is when you have a amount of capital gains that's going to put you in a, I don't want to say negative, but a less than preferred tax situation because of the amount of the capital gains. So if you have unrealized losses sitting in your account, you can sell off those securities, use that then realized loss to offset the capital gains. There are some rules, however, with the wash sale rules where you can't purchase the same security within 30 days of disposing of it, so that you can't use it merely as a tax loss tool. However, with the mutual funds, ETFs, and companies that are so similar, it's very possible that if you have individual stocks that you could find something to replace it that would not be substantially identical, so that you could take the loss. So what you could do is then harvest those losses to offset the gains and basically defer the tax on those items.
Can you use the losses to offset ordinary income?
You can up to $3,000 a year. Any amount after that would then be carried forward.
Oh, so you can, if you have $15,000 in losses and no capital gains, you can take $3,000 against your earnings for the next 5 years, conceivably.
Correct. And it's kind of weird that 3,000 number has never been indexed for inflation.